So greetings everyone. In this video, I'm going to discuss the government budgeting and expenditure. So here are the components of the government budget, which are the capital budget and capital expenditure. So iisa-isahin natin sila mamaya, but first let us define the meaning and concept of budget. So government has several policies to implement in the overall task of performing its functions to meet the objectives of social and economic growth. For implementing these policies, it needs to spend huge amount of funds on defense administration and development welfare projects and various other relief operations. Thus, it is imperative to find out our possible sources of getting funds so that sufficient revenue can be generated to meet the mounting expenditure planning process of accessing. So revenue and expenditure is termed as budget. So yun nga no, yung revenue at expenditure is yun yung budget. So the term budget is derived from the French word budget, which means a leather bag or a wallet. So it is a statement of the financial plan of the government. It shows the income and expenditures of the government during a financial year, which run generally from the 1st of April to the 31st of March. So here we have government budget. So it's stated here that a government budget is an annual statement showing item-wise estimates of a receipt and expenditures during fiscal year. For example, a financial year. The receipts and expenditures shown in the budget are not actual figure but the estimated value for the incoming year. So, ang budget ng gobyerno ay isang taunang pahayag. So, ipinapakita sa taunang pahayag ang resibo at ang paggastos o paano paggastos sa pera. Kung dati kasi panay numero lang ang panukala ng Pangulo sa Kongreso. Ngayon, ngayon ang bawat halaga ay may kaakibat o stated results na tulad ng bilang ng serbisyo at benepisyaryo at may detalye ng mga programa at balak ipatupad. So yun yung taunang kapaloob sa taunang pahayag. So ang budget process dito sa Pilipinas, we are so much aware naman siguro na lahat tayo ay nagbabayad ng buwis at responsibilidad din nating magbayad ng buwis. So ultimo pagbili sa tindahan ay pagbabayad na yon ng buwis. So, responsibilidad din ng pamahalaan na gamitin o gastusin sa ang ating buwis sa mga serbisyong mapapakinabangan natin o nating lahat. So, within 7 months, nabubuo ang panukalang budget na isusumite ng Pangulo sa Kongreso pagtatapos ng kanyang taunang SONA or State of the Nation Address. So, alamin naman natin kung ano yung ibig sabihin ng expenditure. So, expenditure can be defined as a payment or agreement to make a payment, which in return, a benefit, asset, or service will be received. So, for example, sa lahat ng business can have a cash coming in, which can be known as income and cash going out, which can be referred to as expenditure. So, ang expenditure is yung inilalabas na pera para magpondo ng mga proyekto or para magbayad ng utang ng ating bansa. So, o pumapasok na pera, yung tawag doon is income, and yung lumalabas na pera, yun yung expenditure. So revenue budget comprises of revenue budget and capital budget. So let us understand some important terms related to budget. So revenue budget, it deals with the revenue aspects of the government budget. It explains how revenue is generated or collected by the government and how it is allocated among various expenditures head. So this financial statements includes the revenue receipts of the government, that is revenue collected by way of taxes, and the other receipts. It also contains the items of expenditure made from such revenue. So revenue receipts refers to those receipts which neither create any liability nor cause any reduction in the assets of government. They are regular and recurring in nature. Government receives them in its normal course of activity. So The revenue receipts are the income which are received by the government from all sources in its ordinary course of governments. These receipts do not create liabilities or result in reduction of assets. Revenue receipts are further classified as tax revenue and non-tax revenue. So they have two essential conditions. First, the receipts must not create liability for the government, and second, the receipt must not cause decrease sorry for that, decrease in the assets. So revenue expenditures is the expenditure incurred for the routine, usual, and normal day-to-day running of government departments and provision of various service to citizens. It includes both development and non-development expenditure. So revenue expenditures refer to expenditure which neither creates any asset nor causes any reduction in any liabilities of the government. So broadly speaking, revenue expenditure consists of all the expenditures of the government which do not result in physical or financial access. It relates to those expenses incurred for the normal functioning of the government departments and various services. So interest payments on the debt incurred by the government and grants given to state, government, and other parties, even though some of the grants be meant for creation of assets. So in general, revenue expenditures includes expenditure by the government on consumption of goods and services like pension, payment salaries, also on agricultural, industrial development, scientific research, education, health and social services, and etc. So dito mga napupunta ang expenditure o pinagkakagastan or ang budget ng gobyerno. So next is capital account or the capital budget. So it is an account of the assets as well as liabilities of the government which take into consideration changes in capital. It consists of capital resets and capital expenditure of the government. So this shows the capital requirements of the government and the pattern of their financing. So what are capital receipts? So it is capital receipts refers to those receipts which with either year create liability or cause a reduction in the assets of the government. They are non-recurring and non-routine in nature. So receipts which creates liability or result in a reduction in assets called capital receipts. They are obtained by the government by raising funds to borrowings, recovery of loans, and disposing of assets. So capital receipts, the main items of capital receipts are loan raised by the government from public, which are called market borrowing. So borrowing by the government from the Reserve Bank and commercial banks and other financial institutions through the sale of treasury bills, loans received from foreign governments and international organizations, and recoveries of loans granted of the government. So what is here next is we have capital expenditure. So it refers to the expenditure which either creates an assets or causes a reduction in the liabilities of government. It is non-recurring in nature. So any projected expenditure which is incurred for creating assets with a long life is capital expenditure. This also includes expenditure on the acquisition of land, building, machinery, equipment, investment in shares and loans, and advances by the government to state and union territory governments. It is also categorized as a plan and non-plan on the budget documents. Non-plan capital expenditure covers various general social, economic services provided by the government. So when a government spends more than it collects by way of revenue, it incurs a budget deficit. There are various measures that capture government deficits, and their own implication for the economy. So there are three types of budgeting or budgetary deficits. So here are the three types. First, we have revenue deficits. So revenue deficits refers to the excess of government's revenue expenditure over revenue receipts. The revenue deficits includes only such transactions that affect the current income and expenditure of the government. When the government incurs revenue deficits, it implies that the government is just saving and using up the savings of other sectors of the economy to finance a part of its consumption expenditure. So the situation of revenue deficits means that the government will have to borrow not only to finance its investment but also its consumption and requirements. This will lead to a build-up of stock of debt and interest liabilities and force the government eventually to cut expenditure. So next type of budgetary deficit is fiscal deficit. So fiscal deficit is the difference between the government total expenditure and total receipts, excluding borrowing. It can be written as shown. Okay, I don't have equation here. I cannot show you the equation, but let's just proceed. So non-debt creating capital receipts are those receipts which are not borrowings and therefore do not give rise to debt. Example are recovery of loans and the proceeds from the sale of PSU. The fiscal deficit will have to be financed through borrowings. Thus, it indicates the total borrowing requirements of the government from all sources. From the financing side, it is written, okay, I cannot show you again the equation. So, net borrowing at home directly borrowed from the public through debt instrument. For example, the various small savings schemes and indirectly from commercial banks through statutory liquidity rational that is SLR. So the last one is primary deficit. It is important to note that borrowings requirements of the government includes interest obligations on accumulated debt. To obtain the estimate of borrowing on account of current expenditure exceeding revenues, we need to calculate exceeding revenues. We need to calculate what has been called the primary deficit. It is simply the fiscal deficit minus the interest payments. It is I cannot show you again the equation, my God. So yeah, that's the three type of budgetary deficit. So the revenue deficit and fiscal deficit and primary deficits. So let's summarize it. So ang components of budgets, we have capital receipts and capital expenditures. So revenue budget naman, we have revenue receipts and revenue expenditures. So on three types of budgetary deficits, we have the revenue deficit and fiscal deficit and primary deficit. So that's it, and thank you for listening.